What's going on? I hope you're having an absolutely fantastic day. My name is Matt, and on this channel we talk about stocks, trading, and investing. I am super excited about this video because it marks the first one in a brand new series. By popular demand, I will actively be managing an account and sharing all of the details with you, and I mean all of the details. My reasoning, my wins, and potentially most important, my losses. I will do my best to be as transparent as possible. This account will include investing, swing trades, and even some option plays. Also, beyond sharing all of my positions, I will also be teaching you what you need to know about the stock market. I will be starting out with basic terminology, and then I will be progressing to more complex things such as options. If you're looking to learn more about the stock market in 2021, this is the perfect series for you. Before we hop into all the fun stuff, as a quick reminder, I am not a financial advisor. Heck, I'm not even an expert trader. Yes, I have had many wins, but I've also had many losses. My goal is to share what I know to hopefully lessen your learning curve. With that being said, I would love to learn a thing or two from you. If you ever have any questions or suggestions, please feel free to let me know in a comment below. And now, without further ado, let's get started. Alrighty, let's take a quick peek at the new portfolio. Today I managed to gain 6%, but in all reality, it was not the best trading day. I currently own 8 put options on the S&P 500, and if I'm being honest with you, it was a bit of a revenge trade. Earlier today, I owned call options on Tesla, NIO, and Quantumscape, and as you can see, I gave all of those gains back. I should have been using a trailing stop order, and I'll explain why at the end of the video, but first, let's see what I'm invested in. This is in alphabetical order. The first up is Apple, ticker symbol AAPL. I really like Apple because it's a premier technology company, and from all the reports that I've read, the demand for the iPhone 12 is sky high. I've even read that they're going to have to ramp up production of that iPhone by 30% in the first half of 2021, so I'm expecting the upcoming earnings announcement, which I believe is on January 27th, to be a very positive one. And beyond that, all of their other business sectors are growing at a double-digit rate, so I think that Apple stock will perform very well in 2021. I am invested in Apple. I currently own 4 shares, and my average cost is $131 per share. Stock number 2 is Appian, ticker symbol AAPN. Appian offers a platform to enterprises which allows them to build custom applications with a low amount of software development. The demand for this in corporate America is pretty big, and I believe that the stock will benefit not only in 2021, but most likely beyond. I currently own 4 shares of Appian, and my average cost is $149.54. I would be interested in buying more shares of Appian around the 125 to 126 range. The next stock is Alibaba, ticker symbol BABA. From March of 2020 until late October of 2020, this stock was doing really well. And then from November of 2020 until now, the stock has essentially had its teeth kicked in. It all started when the Ant Group IPO was delayed. Ant Group is a fintech company that Alibaba has a 1/3 ownership stake in, and it was such a big deal because Ant IPO was set to be the biggest one ever. After that, the company had more tough times with regulations from both the US and China. I like Alibaba because it is still a giant technology company with access to one of the largest markets on this planet, and the company's revenue really shows that. I believe whether it takes weeks or months, Alibaba will bounce back. It's currently trading at 227, and I own 2 shares at 238. I would be interested in picking up more shares of Alibaba as close to 200 as I can possibly get them. The next stock is DraftKings. DraftKings trades under the ticker DKNG. My personal thesis on this company is a pretty simple one. I believe that the stock will explode as more and more states continue to legalize online sports betting. I currently own 10 shares of the company with an average cost of $47. I would like the opportunity to double down on my position around the $39 price level, which I do believe will serve as technical support. Following DraftKings, we have Lemonade. Lemonade is a new age insurance company that trades under the ticker LMND. It is attempting to disrupt and innovate the boring insurance industry, and it's using artificial intelligence to make the insurance process a bit more simple and efficient. I really like the company's business model, and if they can successfully pull off what they're setting out to do, I believe that the stock will not only go higher in 2021, but most likely in the following years. The stock is currently trading at $120, and I own 4 shares at a cost basis of $121. Also, as a quick side note, from more of a technical perspective, Lemonade stock is currently in what we refer to as a bullish pennant. I wouldn't be surprised if this breaks out sooner rather than later. Anyway, next is Nano Dimension, ticker symbol NNDM. I usually don't deal with stocks of this sort. It's a bit too close to a penny stock for my liking, but with that being said, Nano Dimension has a lot of potential. It is a 3D printing company that has absolutely no debt, and in fact, it has a lot of cash on hand, close to $500 million. This number is so high that it's prompting suspicions that the company will target an acquisition, and depending on who they buy, it could prompt the stock to go sky high. I currently own 100 shares of Nano Dimension, and my average cost is $8.29. The next stock on the list is Palantir, ticker symbol PLTR. I really like Palantir because it's in a growing business sector, big data analytics, and its largest customer is the very deep-pocketed US government. And from a technical perspective, it's right on top of an important area of support, so I wouldn't be surprised if the bull camp steps in sooner rather than later. I currently own 20 shares at a cost basis of $24.64, and I would consider picking up a few more shares around the $20 price level. After Palantir, we have Quantumscape, ticker symbol QS. Quantumscape is another EV play. The company focuses on making batteries for electric vehicles. It is backed by both Volkswagen and Bill Gates. I don't know much more about the fundamentals of this company because it came onto my radar when it recently had a very sizable gap down from $84 down to $50. Similar to Alibaba, I do believe that the stock market is overreacting, and I think there's a pretty good shot of Quantumscape filling the gap all the way back up to 84. I do own 10 shares of Quantumscape with an average cost of $58.48, and as I mentioned before, earlier today I did own some call options on QS, but I sold those when the market went haywire. And finally, we have another EV play, Workhorse, ticker symbol WKHS. This was a very hot stock not even 6 months ago. It was in the running to win a very large contract from the USPS. Unfortunately, the winner of that contract was delayed many times. We were supposed to hear about it in October, then at the end of the year, and now it's supposed to be sometime in 2021. I do believe that Workhorse has a very good shot at winning the contract, or at least a considerable portion of it, but this play is more of a technical one. It just had a very nice technical bounce off the $20 price level. If it can get above $25, I think it has a very good shot of retracing all the way up to $30. Once again, I do think that Workhorse has a good shot of winning a portion of the USPS contract, but this play is much more of a technical support bounce one. I currently own 22 shares of Workhorse with an average cost of $22.47. So, as I was getting ready to film this video, I was pretty excited. It is day 1 of the account, and at one point I was up pretty big, actually more than $2,500. It would have been something nice to brag about, but I made a big mistake. As I was filming this video, there was a report that there's some sort of ruckus going on in DC, and the stock market does not like it, to say the least. So it seems like a great time to teach you about a trailing stop loss. First of all, a normal stop loss is a set price level that if a stock were to dip to it, all of your shares would be sold. A trailing stop loss is a bit more dynamic. It moves with the stock as it moves upward, so you have a dynamic stop on the situation. Let's use Apple and Robinhood as an example. Right now, I do own Apple, and to set a trailing stop loss, you would click on your shares, come down to trade, click on sell, and then in the top right, there's a button that says shares. Then there's all the ways that you could sell your shares, and the second one under conditional orders is a trailing stop order. Here you can have a trail percentage or a trail amount. So in this example, if I were to pick on trail percentage, if Apple were to drop, say, 10% from its high, that could be a sell order, or I could do it on trail amount, and if it were to drop, say, $20 from its all-time high, that could also then be another sale order. I really wish I used these today, but as I said before, I am not a perfect trader, and I really hope that you can learn from my mistakes. I would love to get your feedback on this portfolio in a comment below. Do you love this group of stocks? Do you hate it? Do you think I'm missing an important key stock that has a lot of potential? Let me know in a comment. As a quick reminder, if you're interested in 4 free stocks, there's a link to the Webull trading platform in the description of this video. The company will be running the promotional deal until January 15th, and if you want a 5th free stock, there's also a link to Robinhood. If you enjoyed this video, don't forget to drop a like, and if you haven't already, don't forget to join the Moon Gang by hitting the subscribe button. If you're really interested in this series, make sure you turn on your notifications so you don't miss any of the new videos. All of your support is truly appreciated. Thanks for watching, and until next time, best of luck in the markets.